7/15 is coming in a month. It is 6/15 now, today's date, that's 1 month away. At that point, we're going to be in full swing in the earnings season. So today's calendar date is 6/15, but 7/15 is what our real focus is going to be in the next 20-day price channel going into the July quarterly earnings on the S&P, and how the S&P volume. So on the S&P MMTs, we've had this rising 50-day moving average that we keep talking about, and how that lower level in this. So here is where the bear got into control. For 5 months, we went straight up to the top till right around, what date is this? And I always tell people this was on 5/22. This is when the first part of that bull volatility had a little bit of volatility. And we had a reversal to its support level. Then we bounced up to the lower high, and we came all the way down. This high was 1687. This high was lower at 1674. And this high reversal, red bar, the high there was 1658. And not only that, this particular reversal here, the high of that reversal was 16. Well, let's make sure we got it right. It was 1646 on the S&P. This high here was 1640. Let's make sure we got the right date. Yes, we do, 1647. But let's take a look at the low. That was 1617. No, let's make sure what that low was. 1608. 1608 was this low right here in this candle. That was the low. From the rising 50-day moving averages within the price volatility for the S&P is going to, like we said back in the third quarter week of May, we said that volatility would be here for the rest of the summer. Let's not be in denial about price volatility. It's better for us. We make more money than just the parabolic move that the bull had. Now they've gotten into this short-term piece in the calendar month of June, where markets should act, or bull run should act the way that they should. Shaking the bull out. Shaking the bull out and shaking the bear out. Shaking both parties out of positions. So the rising long-term 50-day moving average is a key support level right along MMTs with the 10-week moving average on the S&P right here. And we know that there's going to be a lot more volatility for the bear, and there's going to be more volatility for the bull. So I'm going to tell you that our major resistance level is going to be this particular high was 1674, and I've got another high that it's going to have to challenge. It's going to have to clear 1648 to get to 1660 on the S&P. That is the S&P major update. The calls and the puts will have that. Look, at times you can buy a call and get a move, but then the puts are starting to give some premium on this index. So we'll be covering that. This is the major S&P 500 update with that rising 10-week along with the daily bull. It's long-term constructive bull with that. When we do break it though, MMT, the next support level would be 1571, and that would be a much more healthier pullback to try to bring a lot of money for people that did not get involved in markets, because the bull is still in play. Bulls have to have some downside volatility. Just like the bears get hammered, the bulls have got to get hammered too. They get hammered in their own bull trend, let's say. But because what happens is that once we do get that volatility working, the volatility hasn't been in these indexes. People have forgotten what price volatility is. So equities are going to sell off at resistance levels. They're going to bounce up. That's what bull side volatility is. Seasonality is here. What am I talking about? The price volatility going all the way through fall, and the price volatility will increase in the month of July, is where we'll see a lot more volatility before a little bit lighter volatility in August, but September and October are going to even be higher volatility range bound bars within this whole calendar year for the bull.